Well, everybody, right now I have Josh Wilson with me. Josh is a member of Acquisition Ace, and he just acquired this past month his first business, which is in the marketing space. And so I'm glad to have Josh on here where he's able to kind of talk through one, how did he find this deal? Two, how did he structure it? Three, what it looks like now that he's actually in the thick of it,
Yeah.
and everything else that goes about doing his first acquisition. So, Josh, I appreciate you jumping on
Yeah.
and giving us some time today to jump through it.
Well, I'm glad that you set this up because I think it wouldn't have happened had I not joined the group. I think the group, the group brings a lot of momentum, but it specifically brings intention. Like there's just people
Yeah.
there that want to close. So I think, for me, it's funny. I've probably been looking for 2 years. I had, been at W-2 jobs, been in the corporate world, a lot of consulting type stuff. Um, and it wasn't until a mentor really encouraged me to start my own thing, but I did that while I was still W-2. So I didn't really make that leap
Yeah.
until about a year and a half ago. And that's when I was really steadfast on trying to find a business. But I got kind of burned out. Was
Yeah.
looking for a
Yeah.
year, couldn't find things that fit in. So I took probably a 2 or 3 month break until I came again across to your Twitter and the group in like June or July of last year and was like, this is what I need. I think that I knew enough to be dangerous, but I didn't have the momentum and some of those questions that if you had that, you'd have enough confidence, you'd start to make the further leaps and get into it. And so um, that's kind of how I got started just in the journey of looking.
Yeah.
I did not have the filter that I had really until also coming across Acquisition Aces. So I think I really had an idea that I was just going to go buy customers for my analytics or IT company. So I have an
Yep.
analytics and IT consulting company. I was like, that's the easiest way to do it. But the more I thought about that, the more I was like, well, I don't know if I really like my industry um, in certain ways. And a lot of those
Yep.
ways were I have to constantly be selling. It's not as recurring. It's very project focused. You're not super sticky. You can be if you're a managed service, but it's really difficult to get into that relationship. And so
Yep.
um, I was looking at that for the year, and I think that's why I got burned out. Was I didn't really see things that messed with my model, didn't really provide the lifestyle that I wanted, and so in getting an acquisition ace, I started thinking a lot more contrarian to what in when you were sharing, the boring businesses,
Yep.
and so I started looking at accounting, started looking at car washes, laundromats, and I still am looking for those. I think they're great deals, and if I
Yep.
could just get an accounting firm that no one else is looking for, which is almost near to impossible, uh,
Yeah.
then I
Very
jump on
true.
one. But went down that path actually sooner than this marketing agency, and it was more of like a fractional CFO. And long story short, that one just didn't work out. And so you do go down a lot of paths of searching and looking. Um, and I probably sent you, I don't know how many deals to get your feedback on. And the framework one caught my mind, caught my attention mainly because of the numbers first.
Yeah. Yeah.
The margins were great. They had not done a lot of outbound marketing, really none at all, and so they were very that traditional, Mad Men creative agency where they were grinding, they were hustling. Um, and they had done a really good job. I mean, I think even in after closing in January, I've learned so much about like the 20-year history of just they were at a double the size. They were doing a lot of different work. So
Yeah.
kind of hearing a lot. I mean, this is a 30-year-old company, so hearing how the ebbs and flows and realizing they've gone through multiple recessions, they're still there. Those were things that it really I was drawn to. The original idea, though, was I would take, majority ownership, give away a little bit, take a salary, and then obviously bring in a salary.
Yep.
Really early on, after I had shared the deal with you, and you're like, "Hey, this looks good. We need to." And I've got some good feedback on customer concentration because that was one of the first things that you gave me
Yep.
was that
Yep.
4 or 5 customers was 45% of the revenue, and um, I got a great learning from that now of there is a pro to that in that when you are narrowly focusing on transition, you don't have to focus
Correct. Yep.
across 30 customers. You have to focus on making 4 or 5 happy. Um, so there is a pro to it. It's interesting. Like it can be a con if they're not happy with you, but if they're happy with you, then almost half your revenue is kind of set for the
Yeah.
year. Um, and they do a lot of that. They do a lot of budget planning and outsourced marketing where they're the marketing team for the company. And so the first thing I knew I was going to do, and this was guidance that I think you had provided, was putting someone in place that run the day to day.
Yeah.
People always
Yep.
ask how I did that. I used LinkedIn. I just went to LinkedIn in the
Exactly.
area
Yep. Yep.
that this company was in, and I looked for people that fit what I thought would be a good leader. I was like, they needed to have managed a budget. I don't want a CMO level person. I want someone that's probably been at VP, been managing
Correct.
a
Yeah.
team,
Yep.
grown a team, but's probably still hungry to be an executive. They've never hit that cusp yet. And so I had five that I found in that, and Minneapolis is really actually great for agencies. I didn't know that, and so in
Yeah.
looking at this, there was a ton of talent. I got to choose from five, had calls with them, whittled it down uh, to my partner now, Ryan, that had lifestyle brands, had Patagonia and Yeti in his background, all the things that I wanted to get into that this company had not gotten into yet.
Yeah.
So had a network that I knew kind of was baked into there. Um, Managed a team, grew three different teams from around 5 to 10 to 45 people a couple of different times. So I was like, that's
Wow.
exactly
Good.
what we want to go do.
Yeah.
He wasn't the cheapest. You know, when we got to talk about what he needs, you know, two kids in school, he wanted a
Yep.
salary, wanted a good salary. And then, you know, was actually fine with the equity in anywhere from 5 to 15%. So that all was good. When I started running the numbers with, man, I really like this guy. I reran the numbers and, you know, was working with Warren and a lot of different loan officers and different SBA people. And the numbers just didn't work in the way that I wanted to get a salary and a distribution and him get a
Correct.
salary and a distribution. With me owning majority of the percentage, with him getting a smaller percentage, um, the numbers just didn't work. It wasn't giving me the DSCR that I really wanted. It was fine for the
Yeah.
bank, but it wasn't what I wanted. And I wanted it to be a lot more. I knew we'd have to invest back into the business to get this to grow. They're understaffed. I got a great example. I was helping one of our other acquisition ACE members look at a marketing deal, and they were doing 1 million less in revenue, but over 2.5 times the size of
Yeah.
employees. And I was
Wow.
like, okay, so I
Yeah.
know we're understaffed, but I think there's a middle ground of being under. So I want to be able to put a lot back into the business. And I was like, look, I'd rather have my millions and my money later
Yeah.
and much larger than getting this guaranteed salary that I just, you know, I think some people will be different. And so I was in a position fortunate enough. And I think if people look at being a W-2 person, you have the financial position to where you don't need the money if you can
Yeah.
balance out being hands off. So I think a lot of this is always going to be what's your situation and what do you want out of it? And I think for us, we wanted about 150K a year kind of minimum. And so I could get that through a salary and really pinch our growth, or I can get it through distributions over time and then really kind of say, well, I don't need it this quarter or as much this quarter. Let's put this back into the business. We've got specific roles we wanted to hire for. And so I went from, you know, working with Warren, I was going to be the PG. I was going to be, you know, putting all the down payment down to I'm putting half the down payment. I'm not the PG. And I only own 18%, but it got me the 150 based on last year's numbers. Um,
Gotcha.
and so, you know, we structured it in a completely different way. He got 150K salary and 82%. But we also structured the operating agreement and the buy sell agreement to where I get the first 18% in the quarter. And so
Gotcha.
I kind of guarantee that's kind of our way of guaranteeing that it's a little bit more guaranteed than I get what's left if of his 82. He actually can only take 80 some of his 82 if we have a certain amount of cash in the bank. So that was another, you know, emphasis that I wanted to make was I don't want him to bleed it. He's already getting a salary. He was fine with that, but we wanted to put it in writing just so we don't get carried away
Yeah,
with
of
it. So,
course.
um,
Okay.
yeah,
Wow. Okay. You said so much good stuff
there was a
there. So
lot
I,
there.
I want, yeah, no, this is cool. This is very cool. So let's go back to where you found, so you got this was a listed deal, right?
This is not biz
It
buy.
was on market, on Biz Buy
Yep.
Sell. Okay. So you found it on Biz Buy Sell. What was the original sale price of this
Yeah.
business? And then what did you end up negotiating it down to?
They had an asking price of 3.8 million. They were using a weighted average of 3 years
Yep.
and giving most of the weight to the last year. And the last year was about 20% higher. And so it fluctuated a lot. Not fluctuated a lot, but it had been up and then down and then up again. And so I challenged that number of 3.8. I think, you know, when you and I talked, we were
Yeah.
highlighting customer concentration. We were highlighting the fact that the seller was very involved, and now seeing
Yeah.
just how much he's involved. Like, people get sellers to stay on when you need them and then
Yeah.
get them out of the way. But the transition is amazing.
Amen
So
to
I
that.
highlighted
Yep.
all of those, right? Like, I highlighted the risks that I thought that there was. He was an account executive, not a creative person. So I knew the relationships were going to be very, very important. So we had a seller note of 650K that was 2 year standby, and I tried to tie that to those top customers. That initial LOI came back and he was like, there's no way I can do this. And, in kind of seeing the business, I understand that now. It's very hard
Yeah.
to guarantee marketing revenue unless you're, digital marketing and you can put that, to the bank. And so we
Right.
took
Yeah.
we took that specific part off, but we left the 650K, 2 year, no payments. Um, and we offered 2.5. So from 3.8 down to 2.5. And I just made it very clear, like, here's the numbers that I'm using. I'm also factoring in risk. I don't like to weigh that last year as heavily, just because I know
Mhm.
now these sellers front in all this investment to try to grow, and then it's not
Yeah.
sustainable. So I just was reasonable with them that I'd like to look at more years. That's how I weighed it. I feel more comfortable doing
Yeah.
that. And so that we came down 1.3 million, but it really was around the fact that they were doing anywhere from 800,000 to a million in profit. But because it was so hands-on, I was really looking at about a 2.5x multiple, a 1x multiple
Yeah.
in revenue. My idea was that I didn't think they would. I thought we'd come somewhere in the middle. I said, you do 3.8. I think that's way too high. I'm going to come in at 2.5. And I thought we'd meet somewhere in the middle, but he came back at 2.7. He came back at 2.7, but
Nice.
took off that seller note contingency. And I was like, okay, that's fair. I'm not going to come and meet you
Yeah.
at 2.6. That's bullshit. Like,
That's very
I'm going to
fair.
be,
That was
you
very
came
fair.
way to
Yeah.
me. Like, I'll take that off and we'll run with this, because that still gave us really good DSCR number,
Yeah. I
really
bet.
good returnal rate of return on our cash. It allowed me to put half down and get that money back in year one. And so those were really kind of the initial numbers that. So we agreed on 275. That was just a little over 2.25 times earnings. And let's see, what are some of the other details we
So what
took
was
off?
the loan for from the SBA? What was the actual loan amount then at that point after
1.8,
your down payment?
yeah, 1.85 or something like that. So, that's
Gotcha.
the 2.5 minus the 650. I think it's around 1.8 something in change. Now, we did an unconventional way. So, I didn't get to use Warren mainly because once we switched the deal and my partner was the majority, he had relationships at US Bank. US Bank's
Oh yeah.
heavily up in
Yep.
Minneapolis. I will say, if you can go away from US Bank, go do it. But they did get good rates. I mean, I will say the user experience, the banking experience, the mobile app, I mean, it's atrocious. So if you can go away from
Yeah.
it, go away from it. But we got
Yeah.
8.5% fixed, which was really
You got
strong.
8.5%
Eight and a half
fixed.
percent fixed.
Whoa,
Um,
that's a
so
really good rate. Yeah,
that was
that's a very good
fantastic.
rate.
And so that's
Yeah.
literally the reason we're
Very
with
good.
them. We're with them, and we'll put up with that. I've got Chase and some
Man,
others
that's
to me.
really good.
But I'm like, unless you can do this and make it to where it's hardly any to cost over and to refinance them, we're going to probably stick. So
That's
we
saving you
still,
about almost 30K a year in in literally payments. So
yeah,
you're adding another 30K back to the budget. So that's a big difference.
it was
That's good.
huge. And that was not something we
Yeah.
forecasted for. I forecasted for about a 30K monthly payment on the loan.
Correct.
We're at,
Yep.
we're at 22.9. So we saved
Yeah.
seven
Yeah.
grand a month. I mean, I'm
Yeah.
skipping at the beat because I'm like, we can go hire someone with that. We can, so
Yeah.
we got really lucky with
Yeah.
that. Um, and really, really changed a lot of our approach on kind of how we were going to be able to fund
I
it.
love that. Love
And so
that.
we
And I
we
think the
put
lesson here too, for everyone listening, the lesson here is that Josh, he got introduced to Warren over at Live Oak Bank, and he, through circumstances, he shopped around. His partner had a different relationship, and when it comes to the financing aspect of doing a deal, 100% you should shop around, right? Some banks are better than others. Some banks are going to be like US Bank, like you said, maybe their user experience is not that good, but they gave you a really good rate. And at the end of the day, that cash flow was worth more to you than having a great user experience when it comes to the bank. And so definitely go out there, shop around. If he had gone with the other bank, he probably would have been more towards 10, 11%, not 8.5. And
Yeah.
so that saves you a bunch when you're talking about a $1.8 million deal.
Yeah.
So all that to say, great job in shopping that around. That's much better. Much better.
Yeah, I appreciate it. And I think, one of the big lessons is that, and Warren shared this too, is that each bank kind of specializes in different areas. And so
Correct.
what one bank may think is risky, other banks specialize in it. I've struggled. Yeah, I think I reached out to you. I still struggle with international companies. I wanted to buy an India-based IT company, but like literally,
Yep.
I can't find a bank that'll touch that. So it's all private. But almost every one of them is like, oh yeah, we specialize in accounting. Warren knows that really well. They've got a department for it. You want to do
Yep.
e-commerce, a little bit more risky, a lot of growth. There's other banks for that. So yeah, I think once you find the right one, there's a bank for it. I mean, I can find a bank for international, but man, it's a lot of private lenders and stuff. So I think long
Oh
story
yeah.
short is everything can be lendable. You just got to find the right people to do it, and it takes some legwork. But a network like Acquisition Ace helps that because someone's probably asked the question or done something.
Yeah, exactly. And that's the power of having a community on that side. So let's go back then to, so you originally started out where you were going to be the majority owner and you were bringing on this partner who was going to be the minority owner. But then when you looked at, okay, the amount that I'm going to be making after bringing on the guy, and this is the other point I wanted to make earlier that you talked about. You found the right person, but obviously they're expensive. Okay.
Yeah.
And at the end of the day, you get what you pay for,
Oh
especially
yeah.
when it comes to the type of person you were looking for that had the experience and had the chops to now take this business from where it currently is and take it forward. And so, is that worth paying X amount more per year to find a person with that level of experience and network?
Yeah.
Absolutely. If you can
Yeah.
swing it, you go for it because that's going to be the difference in quality from someone who has very minimal experience and you can get on the cheap to the person who it has that experience, has those connections and that network, and you're able to bring them on board and make them a partner. Every time, if you could do that, you do it that way. And so you went from majority, minority for your partner to now majority for your partner, minority on your end. And what that allowed is one, you don't have a personal guarantee on the loan, right? Because you were below that threshold of the 20% on there for the bank. And at the same time, you're now guaranteed that 150K a year
Yeah.
for your salary, which you're getting. And now on the distribution side, for everyone who's listening, he kind of gets front loaded on the distributions for that first 18% as a way to basically
Right.
make sure that he's
Oh,
not
year
getting the
one.
leftovers. Yeah, exactly. That's great. And so
Well, and I
so
think the big thing to your point that you've taught is if you really want to do multiples of these, you've got to think of what that day to day looks like.
correct.
And I think the
Correct.
challenge I found is that a lot of people now, and this is where I would love for you to help teach us a little more on if I'm 80 something percent, is the expectation that I can be passive? And I think the answer is yes with the right people. With this
Correct.
partner, he was really like, well, if you're going to take a salary and you're going to be the majority, like, what are you going to be helping with? So I saw his perspective and again, I think at the end of the day, did I want my money now in hundreds or thousands of dollars, or do I want millions, 5 years
Done.
from now? And that's what I want. I looked at the fact that we're going to exit in 5 years at 10 million. I'm going to get
Yep.
close to two. And I'm going to be
Yep.
able to do that passively while I didn't take up my SBA note. That was another big thing. I was like, if I want to go be a
Yeah.
majority and go get a $4 million business, I can literally go do that tomorrow. And that was a big thing because I thought once we get this up and running, it may not be something I have a lot of added value. I can go sell for sure, but if
Yeah.
I want to go do an accounting firm that's doing 3 or 4 million, I have free capacity to go do it, and I can be the majority in that one. So I think again, each deal is a little different, but I now am seeing I'd love that 18 to 20% range on about 5 to 10 companies playing this advisor for 3 months, less of an advisor beyond that, helping with, I'm big on EOS, so you'll hear me talk about that a lot.
Yep.
Probably
Yep.
implementing that at all the companies, and that's my role as implementer, guide, that back end stuff, automation, all the tech stuff. Um,
Yep.
but it really allows me to say, okay, for 3 months, I'm going to probably be heads down, and this month has been pretty busy for me. But I'm already starting to see February completely lightened up because we've transferred all the software accounts. I've done all the HR admin stuff,
Yep.
and so that will start to lighten up, and then we'll implement EOS at the later part of this year, and I'll do check-ins, but it'll be much more advisor coach. So that's I
I
think at
love
the end
that.
of the day, as long as people are saying, well, what do I want to do with my day to day? because you can't be hands on with this one and go do 6 more. You've got to figure out, okay, you can be hands on, but have a plan. My plan is I don't want to be hands on. I'm behind the scenes, and I want a lot of these because time is my biggest commodity. And so
Correct.
that's where
love, yeah, I love what you just said. Time is your most valuable asset, and I think that let's go back to how why you were okay with that, and it's so important. Like right now, I've done in my area, I've done 7 acquisitions. Not all of them are 100% ownership. Actually, the vast majority of them are with partnerships. Some of them are minority ownerships, right? Just like you just did right now, and I have now put a priority on doing ones where I'm walking away with 15 or 20% or anything else like that. Right now. I just did an acquisition in December 21st. We acquired an accounting firm in
nice.
Kentucky, and I have 2 other partners in that, right?
Yeah.
And they're the active partners, right? And the
Mhm.
equity shows that. I'm walking away with a good percentage of the business, and I'm helping them with the implementation, very much on the systems and processes. I have a team that does it with my companies, and I kind of just said, okay, do it on this company. They're going to work for probably about 2 months, helping
I need to
them
get some of
all the
that.
same things you just mentioned with the software and with the HR implementation, all that good stuff. Get that done, and then after that, it's pretty much quarterly meetings and
Mm.
making sure that it goes on. And with your skill set that you just mentioned, with the back end tech systems, everything else getting implemented, you are doing where just I mean, look at the return on investment, right? You are getting 150K salary, so that's guaranteed every month. You're getting your monthly nut coming in. On top
That's
of
the
that,
sorry.
yeah,
I think
yeah.
that's the partner is getting the 150K salary.
Oh, I'm sorry. Okay, so you're just
Remember,
getting
I
the
gave up the
distributions on
salary.
that.
I'm
Gotcha,
getting the
gotcha.
distribution, but I get first rights to the distribution. Yeah,
You
just
get
wanted.
first rights.
Yeah.
Gotcha.
I
Oh, thank you
wanted
for
that.
clarifying.
I wanted that
Yeah,
dedicated amount, but that's where the numbers of us both taking a salary just hit
didn't
that
make
deal
sense.
are too much.
Yeah,
Yeah.
yeah. That makes especially with you growing the team too, and you're gonna have to
But the
utilize that for
18%,
that team.
yeah, but the 18% with the way that we modeled out last year, and granted, I'm super excited. We beat last year's January by 50%. So like it's already going
Let's
well.
do that. 50% is a huge growth rate too.
Yeah.
That's awesome. That's
And so
awesome.
like I see it as like this company's very lean, very profitable. There's no
Yeah.
challenge with that. And so I do see it as close to guaranteed, but with a lot of flexibility that if I don't want to take that full 18%, it was something like, yeah, I think it was around 18K in January is what I would take home. Okay, great. We did
Yeah.
100K, a little over 100K in profit. I get 18K of that. But if we want to go put it back into the business, I can. And so,
Yeah.
a lot is just going to be, well, is that money going to be better served putting it in? Or because what am I going to do with it? If I don't right now need it, if I'm a W
Correct.
2 or got other income, you may get a lot more return back putting that money back. So I wanted that flexibility to
Makes
take what I
perfect
want
sense.
and put it back. Yep.
Yeah. And it is also, and back to your other point. So you just mentioned you have so are you still, just let everyone know, because a lot of people, the most common question I get is, can I do this? Like in their heads, they think if I acquire a business or do what you just did, I can't be having anything else going on because I need a full on, this will be my thing. So for you, why don't you let everybody know, like you just mentioned, you still have other income coming in from your other business and everything else like that. So you're getting a W-2 type income coming
Yep.
already from that. So why don't you let everyone know that this is very much something that you're doing part-time. This is not your full-time gig, and kind of show them that situation.
I'd even encourage people to do it while you have something because
Correct.
that's the
Yep.
least risky time to do it. I
Yeah.
got really lucky when I was at Panasonic Avionics, where my mentor, who was an executive there, said, you're never going to get the same support that you're going to get from just this company. I was doing IT. I was a director of analytics. I was basically trying to constantly convince people to use data at the company. And he saw my
Yeah.
frustrations with it. He was like,
Yeah.
data driven, whatever. So he's like, you should go start it. And I was like, I just don't know. He's like, start it now. He literally encouraged me while I had a full-time job working.
To do
I
it.
mean, I was
Yeah.
his direct report. And so like forever he'll be a mentor of mine because I wouldn't have started had he not said just go do it. But I
Yeah.
think the short of it is, make sure you're not contractually competing. Make sure that you're not,
Yeah.
breaking something where it's going to get sued.
Correct.
But you can
Correct. Yeah.
absolutely. I started mine from scratch while doing it. That's a lot more time consuming, I think, than this, where you can choose to be passive right in the gate, which is
Yeah.
why I love acquisitions now more than building. Because I'm like, shit, I can literally do this
Yeah. Yeah.
immediately. Um, and so, for years, I was doing both. I was running my IT consulting company that's now 5 years old, and I was keeping my W-2. I left Panasonic and went to AWS. and still kept my business. Now I had to pause that because they were conflicting. And so, but
Yeah.
they knew that I was coming there to learn the consulting business to be better at it. So I was a consultant at AWS selling analytics. So I got a lot more
Yeah.
experience out. And so I actually didn't go full time, my IT company, until I knew I was going to buy one. And so then I was like, well, with IT and buying another company, I should leave AWS. So I left AWS last year. And that's when I was like, acquisition search was full time, but I already had that income set up. So,
Yeah.
man, I actually think it's perfect. If you set it up the way you want, you can get that passive setup while you're doing W-2. The first few months will be busy for sure, especially if
Yeah.
you take on any role that you're going to add value. You could add no value and just be the money person. But if you add value and you
Yeah.
do back end and you want to improve processes and set a foundation, it still all can be done in less than a full-time stay. So you can come home at 5 or 6 o'clock, work for a couple hours while you're doing HR, back end, admin stuff. And in 2 weeks, all that stuff's done and you'll never have to do it again. I use Gusto. You referred me to
Yep.
Bench. Bench
Yep.
is, I mean, there's so many softwares and tools that, yeah, it takes you a month
Yeah.
to get those things all set up, go through the demos, get the onboarding. But now my team now has never had a bookkeeper. They've never had some of these processes automated.
Yep.
They're getting
Yep.
hours back every month, and it only took me a month to do it. So I absolutely think that's the least risky way to do it, is do it while you've got income coming in. You don't have to have
Yep.
a full-time search. Um, and then you can even keep the W-2 while you're doing both. I mean, I think that you can do
Exactly.
multiple things. It's just how you prioritize the available time you have. Again, time being that commodity. What do you want to give up? Because it's going to be a trade-off, but it's absolutely doable.
Absolutely. And going back to like time being the most valuable thing, and for me, I have a family, I have 3 young kids, and for
Mhm.
me, could I go out there, do it all on my own, get 100% ownership, and just grind? Yeah, I
Yeah,
could, right? But what else is going to suffer? Because as you just said, everything's a trade-off. Am I
absolutely.
going to then work 60-hour weeks? Yeah, I'm making more money than I've ever made, but at what cost, right? At the end of the day,
Yeah,
what is money worth
for
if you
sure.
don't are not able to spend it with the time, like time with the people that you want to spend it with, right? And so
Absolutely.
for me, it's always I would do 10 deals where I make 10% rather than a deal where I have 100% but doing all the work.
Yeah.
100%, I would do
That
that.
may have been the biggest
And
learning for me in the last few months,
yeah,
was that transformation of, it's so much more valuable to be able to do that just with your time. And that makes every dollar then that you spend on the business that much more worth it, because you'll only do high value things. You won't be involved in the
yeah,
things that you don't need to be involved in, because you'll push yourself. Now, if you're at 80 something percent, you may force yourself to do jobs because you
yeah,
don't want to. Yeah, a lot of that pressure's on you. So yeah, I mean, I love that you did that. I think the way that you communicated that out helped other people kind of think, well, hey, it can be structured any way you want. And then you start learning the nuances of SBA under 20%
yeah,
and PG, PGs and all this stuff. So you just see, okay, there's a lot of nuances. What works for you? What do you want to
yeah.
invest in? Where do you want to put your time? Yeah.
Awesome. So how has everything been working so far so I'm guessing the partner in this deal, he's the majority owner now, so he is making this more of a full-time
Oh
gig.
yeah.
Um,
He gave his 2 week
yeah,
notice a week before, or 2 weeks before we closed. Was
awesome.
really
And
waiting
so
on the
how,
QE
yeah.
and the QE came back. So yeah. Yeah.
Gotcha, gotcha. So he is. So how's that been going so far? Has that been all what you thought and hoped it would be with him kind of in that position?
Man, I got really lucky. I don't know how many people can go find a random person on LinkedIn, not really
Yeah,
know them super intimately. I mean, like, work with them intimately. Less than 10 conversations before I signed a partnership agreement. It's above and beyond. And I
yeah,
think when I focused on taking care of him, when I made sure I find a person that he was a family man, we connected on like our competitive spirit. He was a
yeah,
triathlete kind of stuff. There was a lot of things we connected on personally. He'd been through a lot of challenges in life. I resonated with that. So I got lucky though, because he has hit. I mean, he's perfectly fitting this role. Um, he's very personable. So the old seller, he may have been kind of burned out, so he wasn't as
yeah,
personal with the customers. I'm already getting feedback from customers that it's this new wave of energy. The employees love his energy. You get in some of these agencies or just some of these companies where they're grinding, but they've hit a
yeah,
plateau. And so they
yeah,
only know grinding. It burns people out. And so we're bringing this mentality where, yeah, we may have to keep processes some the same the way they've been for now. All the while, this person being Josh gets to be behind the scenes, figuring out how we optimize your lives, give you more time, focus on the right projects, focus on, and then give them transparency. They've never had that. They don't know. They get bonuses sometimes, didn't get bonuses most of the time. They don't know when they get
Yeah.
them. They don't. So, we're bringing some pretty basic management. Communication was really big. They'd never really been privy to, he would just do all the estimating and quoting. They would never know, like, a lot of these
Yeah.
things. So I tell you, I think there are some surprises, in the sense that on the good side, like, I just don't think we factored in, when you go buy a 30-year-old business, you think you're going to convince the employees you're good, you're not about to disrupt.
Yeah.
In a week
Yep.
and a half, Ben, I found out we were saving them, and they wanted this to happen because they were looking elsewhere at other jobs and, like,
Really?
upset and
Wow.
burned out. All the while we were being told by the seller that they're all super cared for and happy. And
Yeah, of
so,
course. Yeah.
that was a
Yeah.
huge surprise from a good stance, that I've had two people get emotional with me in the last month saying that we care more than their owner, who's been with them 15 years, had ever cared.
Yeah.
That's something you don't
Yeah.
factor into the numbers. And my partner was super excited about that. He comes from a creative background, whereas the owner, the old owner, came from an account executive background. So very different
Gotcha.
relationships,
Yeah.
where now he's resonating with the customers. I've been in your spot. I've had to create, whatever the ads are, whatever the types of
Yeah.
collateral is. He knows that spot. So he's resonating with them on a whole different level. Um, and we've had good surprises with, the SBA loan being a lot lower. We found out, that 50%, the seller did a really good job of front loading the backlog so that we were busy this month and this quarter.
Yeah.
So,
Yeah.
but again, no outbound marketing. He doesn't do, he does, we do 25% government work, but he manages looking for deals. So we're already bringing someone on Upwork. That's all they do is RFPs. And that's all they're going to do is go bring in
Oh,
more government work.
good.
We don't
Good.
do any digital marketing, no SEO. I mean, we do very little, and only if our current customers request it. So that's a massive area. It's a very traditional
Really?
agency.
So, yeah, okay then, because most people, when
Yeah.
they think marketing agency, they're thinking digital. So what
Yeah.
do you guys do in terms of your services? Because I'm interested, because in my head, when I hear marketing, it's always digital
Oh, yeah.
SEO. That's all I'm hearing. So,
And that's the margins, because you've got high
yeah,
end margin stuff like Google Ads and SEO and that type of work. This is a very traditional, like when you go watch Mad Men and they're creating
exactly.
ads,
Cool. Yeah.
and they are
Yeah.
doing branding strategies, design. I mean, we do video, photography. We have a lot of deals with liquor companies where we take pictures of bottles. We help design labels. I mean, it's a very
Wow. Okay.
traditional,
Yeah. Yeah.
uh, and the team loves that. They love creating real content. This team has a very creative background, so they're super, super talented. They don't really even want to do SEO. So when we do that, we'll probably outsource, white label
Yeah.
it at
Yep.
70,
Makes sense.
80% margin. And so that's another thing I really loved about this business, was they were doing 50%, after it's said and done, about 35, 32% margins, and not doing any of the high margin work. Very just like billable hour. They're still project focused, but they've
Yeah.
got customers at 20 plus years. So there's things that we're asking the team now, do we want to keep these customers in a year or two?
Yeah.
Like, do we want to just be in manufacturing, healthcare, and government? My partner comes from lifestyle, outdoor. We want to do that. Outdoor stuff, travel,
Yeah.
fun. And we're not even doing that. But I come from travel and he comes from outdoors. So we'll bring that within our network. But it's just gone really well. I mean, I think, when you look at deals, make sure it's got room, because everyone talks about the hockey stick, and we're seeing
Yeah.
that. Like, you get in month one, you want to invest, you want to get software. Some of that costs money. We added healthcare. So they had never had healthcare, but we found on Gusto
That's
incredible good
awesome.
deals.
Yep.
We paid
Yep.
for it fully. It was, $300 an employee, which is a fraction of what, they're paying 1,200, 1,500 bucks.
Yeah.
Stuff like that.
And you're building instant rapport with your employees. Like now you're like, hey guys,
100%.
we care about you. We're going to cover your health insurance. What better way for you to say this is a different leadership, right? Like we're putting you guys first. And so
We
that's
do.
awesome.
So it's
Yeah.
just been, it's been really fun. I'm loving the back end. Let me be passive, because I
Yeah.
can do what I feel is the most valuable, which is really fun. I don't get kind of boxed into a role. I can kind of be, the free safety or a freelancer and work on
Yeah.
the things I
Yeah.
want to work on. And once we've done that, so I worked on getting Bill.com, ARAP in. I did bench bookkeeping. we got all the benefits. We got Gusto. So that's where I've been. And we've got a really archaic project management tool. It works for the team now, but I'm already looking at those. Now that's a lot more disruptive.
It is.
Um,
Yeah.
so,
Yep.
I'm having to kind of really be methodical about that one, but all of these are things, the bookkeeping, the ARAP, that was all things the old seller was doing. And it wasn't a lot of time, but if it's 15% of his month and it's a distraction, and you look at like that
Right.
hierarchical distraction measures of if he takes 5 minutes, he was doing invoices manually, and we had 150 invoices a month. He was doing vendor payments manually.
Great.
He's got a bunch of
Yeah.
payments. So all that's automated. I mean, we did that pretty quickly. And so really the focus was I want my partner doing business, selling,
Yeah.
pitching, working creative. And so that's our goal. He'll do some of this for a little while because we have to really change some of the processes the seller did. But that's over time, and we're already starting to see benefits short term of some of these changes we've made.
Gotcha. So, okay, go back to, so just to high level, and when you were doing your projections in terms of, because remember, like as you mentioned, you're not getting a salary, you're just getting on the distribution side. Month
Yep.
one, 50% year over year growth just in that month, and obviously your portion of that is a nice chunk, the 18%.
Yep.
What did you project for your first year? You probably had a conservative projection and kind of like
Yeah.
best, like good, better, best type projection for your 18% on a deal this size with after the first few months being pretty semi-passive in
Yeah.
this business. What do you project in terms of cash flow if you wanted to take all of your distributions, which you probably won't, but if you wanted to, what does that look like in your projections?
So the lowest end was 10K a month. So it's
Yeah,
120K. I really wanted the 150, but I'm very conservative because I'm like, I don't have that until it's in the bank. Like, let's go
yeah,
the lowest end that you can live with. And so 10K was like at our minimum. Um, that's going to get blown out if we even do remotely. I'm almost doing
yeah,
double that. If we did a little over 100K in profit, 18K of that would be this month. That's almost double. Um, I think that I'd probably be pretty comfortable with 15K a month from something pretty passive because
yeah,
that's over the 150K initial investment. And that's
yeah.
really what that was my, if I can get that money back in year one, I'm sitting in a good spot. And because now
Oh
it's
yeah,
kind of, it's
yeah,
passive, and again, the goal is, and him and I are both aligned. That was the partner I picked was like, I wanted one that had grown and wanted to grow.
yeah,
And on top of that, like I found a guy that had dreamt to do this his whole life and just had gotten busy
yeah,
with family and kids. And so he was like, you're fulfilling a dream of mine. So he's super flexible, but yeah, it's 18K was this month. January is actually one of our lowest months of the year. So I don't know what's going to end up happening when I
it's
see that.
crazy. Yeah, yeah,
Maybe it's closer to 200K. On the
yeah,
high end without growth, that's kind of where it could be is 200 to 250K passive again coming out each quarter. But if we start to double, where we want to go, now you're looking at 30 to 40K a month. So again,
so
way more than I expected.
and so just for everyone, again, just to break down the numbers for ease of understanding. So Josh brought 150K to the deal. And for the 150K that he's bringing on, let's just say base case, no growth, conservative, based on the first month's numbers, let's just say he's going to hit that. He'll be very close to hitting it on the worst case scenario from no growth base case. So that's 100%. Let's just say in year one, he makes back that 150. Now, it looks like you're going to definitely, if I had to guess, if you're doing this in a low month,
Right.
and and you also are going to put like later this year after you've transitioned and everything is now in the new systems, you start taking on more accounts. There's a very, very good chance that you're probably going to double that 150 or get close to it, right? And so um, think about, and so in 12 months to be able to not only get 100% return on the base case, but potentially up to a 200% return year one. And then, and again, at this point, Josh is putting in very little time,
Right.
and then he takes that and he's already has the same mindset like I did, which is like, this is working. Let me go and do this again, right? And you still have over $5 million with the SBA because you didn't take a PG out on this one. So you still got another huge, a $5 million line basically to go and do this again. But the way you've structured this, especially being on your first deal, I love how you took instead of being like some people have in the mindset that I have to be the majority owner, it has to be my business. And you basically said, hey, I found a great guy. This can work this way because my most valuable asset is my time. As long as I can make my 100% back year one, I mean, for everyone out there, 100% back in year one on your money, it doesn't happen, right?
Find
Like
an
real
investment that you
estate,
can
stocks,
control.
anything
Right.
out there, that's not happening, right?
Yeah.
You're hoping stocks wise, you're getting like your 10% year over year, and in the S&P 500, like you're hoping for that.
Oh, yeah.
Whereas real estate, you're spending a half a million bucks to hopefully make $300 in cash flow, right? So
Right.
totally different ball game here. And Josh, you're knocking it out of the park here. So I guess my next question I want you to go into real quick is, um, so you did this again. You have you're doing this part time. You hit this deal. You found the your partner on LinkedIn. So I want to kind of hit on that because I've found partners on LinkedIn. Actually, my first software company that I acquired, I found the deal on LinkedIn with the owner, and we partnered on that acquisition to do it. So I know exactly how that feels, and I've hit LinkedIn so many different times for finding different things. So tell people kind of your strategy real quick on how many people did you reach out? So like, did you reach out to 50 people and finally found one, or was it like in the first 10? How did that reach out process look like?
Yeah, I mean, I think, you want to define what you want. So kind of create that job description, right? And a lot of that is based on your own job description. So what do
Yeah,
you want to do? What's going to be, you really need to understand what the seller's day to day is, because some of that will be offset, but in the first several months, that's probably what your partner, that the next person running the data, that's what they're going to have to do. Um, so I had it really pictured that I wanted a leader that had managed a budget, that had grown a team multiple
yeah,
times, because again, that was aligned with where I wanted to take the company. And so that's what I looked for specifically. I went into Minneapolis. I wanted someone local because this wasn't a remote business. So, you had to factor that in, that
yeah,
you do a lot of government work with Minneapolis. There's relationships
sure.
there.
Yep,
You got to be there. We can do outside of that state really easily with a lot of services and can travel, but your base business is there. It made a lot of sense. So I went into Minneapolis and LinkedIn and I looked for, again, people that fit that job description. So director would be kind of low for what I'm looking for because they may have only been a director for a couple of years. I really wanted someone in a VP role. Um, I talked to maybe two CMOs, but it was interesting. Like their take was just very, well, I'm executive, so I'm already kind of doing some hands-off passive stuff. And I'm like, I don't want that.
yeah, yeah,
I want someone that's
yeah,
built and been building because that's what we're going to do. We're going to build. And so I probably reached out to 10, a couple of CMOs just to kind of stretch myself, but almost all of them were VPs. And then that was a varying degree of types. I mean, well, your industry is very
yeah,
different. If it's finance, it's probably straightforward. VP of strategic finance, boom, you're good. With mine, there was a creative director, there was VP of marketings, which is like your traditional, corporate
yeah,
VP of marketing, VP of marketing operations. What was neat about this guy specifically, and when you looked at all of them, some of them had digital backgrounds. His was so creative. And so again, finding like if your accounting firm does specific industries and focuses on dental,
yeah,
you may want someone that's got some dental background if that's what they're going to take on, just so
yeah,
they speak the same language to these people. So I wanted a creative that spoke that language, that could fit in with the team, but also managed that corporate world, so he knows how to manage a budget and can speak that way. And so I originally started with just messaging, then set up 5 calls, whittled 5 calls twice down to 3 people,
yeah,
uh, 2 more calls with each one of those where I actually kind of shared with them, got an NDA and shared some numbers with them so they could see
yeah,
what they're up against and what they're looking at size wise, because I wanted to make sure it resonated with what they've been through. And
yeah,
so that's where it got into more of the weeds. And I was like, okay, this is the right guy. He understood it. I got a lot to know him a lot more about his competitive spirit, about what he had grown, been at startups, but also been at large companies. So he knew how to make that transition to make it bigger. Um, and then, then I wanted to make sure that we were really buttoned up. So we have a buy sell agreement between each other. We have an operating agreement between each other. It
good,
lays out
good,
our roles and responsibilities, what he can expect from me as a passive owner. Here's the things that you can expect. Same thing on his. What would he run on the day to day? So if he breaches that contract and starts becoming passive, we've got some recourse for that. So I really tried to go through once we found the right person. But I found him early. I think that's another part of the timing, that a lot of people find deals and then go find the person. Now I found this
right,
deal and then found him, but I brought him in really early. And the reason for that was because I wanted his industry expertise in assessing the deal. Now I'm still the
yeah,
numbers person,
yeah,
so I still came up with like, I was a part of your group. He knew that. He knew I was going to be creative with the offer and the flexibility and the LOI and the purchase agreement,
yeah, yeah,
seller note. I came in with all that knowledge, but he really understood When he looked at project type, he was the one that educated me that customer concentration may not be a bad thing just because of it'll help him focus on the 4 or 5. Um, we tried to pitch to get a survey done to our customers before we sold to see, how those customers felt about us. He wouldn't let us do that. So we did take a risk there.
Yeah.
But it's been great because we have a lot of clients that pay us 5 to 10 grand a month that we don't need to oversee at all. They're web dev, that type stuff.
Yeah.
And then we got 4 or 5 of those customers where we're their marketing team. And so he's just hands on with those. And so I liked bringing him in early, especially if you don't have a lot of experience in that industry. It just gives you someone in your back shoulder to help you kind of walk through that deal.
Yeah.
But, I'm still minority, but he's still letting me lead in a lot of areas and guide him on a lot of things because I have been through this. So great partnership. Man, I swear by LinkedIn. So it's funny that you found those two because
I did too. I know, I do too.
Where else are you going to get someone's resume specifically that fits? I mean, put yourself in the talent acquisition person and go get the best person that fits, at least on paper. And then, hopefully you get lucky in the reality. But, with conversations, you can get to know what are they doing outside? Are they pushing themselves outside of work? Because they'll push themselves inside of work if they're working on themselves, Correct. If they're trying to grow as people. But it's a lot of luck, it's a vibe and you got to hope that resonates, if you do those kind of things, but it worked out.
Yeah. And I think you mentioned it before too, that you knew he was a values-based man. He had a family. You looked at you connected on things that were outside of business, his past, Sure. the things that he does in his off time, the struggles he's may have had and overcome. So when you want to get a measure of somebody, you're not just going to look at what does his resume say. You're going to really try to get to know them and what's not on the resume. Tell me sometimes where you failed and really get to understand how he's been challenged. Because at the end of the day, we don't want anyone who's not been challenged in the role, right? Because they're going to get challenged, right? And we want to see how they overcame the challenge because if this is the first time you're going to be challenged in life, I don't want to see the result because most of us fall flat on our face the first time we're challenged. And so, no, I think you hit the nail on the head and LinkedIn is an amazing resource for people that are looking for talent. And it's not like the first person you reach out to is going to work. It takes, like you mentioned, 10 people after doing a bunch of research, they kind of limit it down. I've done it to where I've had dozens of candidates, did dozens of calls and whittled it down to the last few and then really started to put the time and effort into getting to know them. So I guess as I know we only got a couple minutes left here. What, if you were to tell anyone who's looking to get into acquisitions, right? Small business acquisitions, what would just be a piece of advice that you would throw out there to them?
Do it. From the sense of having confidence, because when I look at where that 150K could go, a lot of it is outside of your hands. And I wanted to bet on me. So I think for those that are in W-2 jobs where people haven't bet on them, go bet on you because that's the best return you'll possibly make. You'll learn, you'll grow, you'll make a ton of money. The difference because now I've built and I've grown was building is hard, grinding, uncertainty. But when you buy, you can write down your filters of what you want the business to look like and you'll find it. Now, maybe it takes you a year, maybe it takes you 2 years. You can find a deal tomorrow, but the challenge is the right deal takes patience. So I've learned that, but I've also learned, I think with you and I've talked a lot about this, almost every deal can work out if it's the right numbers, if you're flexible. But again, coming back down to why your foundation. So you've got a family, I've got a bunch of farm animals. I want to do that. That's where I want to spend my time. I want to learn that area of life too. So, I think you've got to put that together before you go do the search. And then you have to draw those lines in the sand when that deal comes across and it doesn't fit what you're wanting to create for your life. You've got to take that hard decision and pass. And, we've talked about this too. I've probably looked at hundreds and hundreds of CIMs where I'd go down the path and look, you just got to keep doing it because with intention and focus and determination, you'll absolutely get there.
Oh, you
maybe
will.
It takes a few months, maybe it takes a year, but you'll get there and it'll be the best money you can spend because you're not putting it in a stock where you have no control. You're putting it on you as an individual and your abilities. And I've stopped doing a lot of investments that way because I started thinking, well, if I'm in my prime thinking and growing and building mode, where should I be putting that money? And it's on me. So that's my advice is for those that are in this group, you've already made the step. take the next step and just bet on yourself.
Yeah.
That's why we're all here, right?
Yeah.
Make our
Wow,
mark.
man. I could not have said it any better. Absolutely. Well, Josh, I appreciate you and kind of being transparent with us and telling us about the deal and the steps and kind of what you're focused on. I'm super proud of you, man. I remember when I first met
Grateful
you
for your
and you
group,
jumped
man.
on in and I'm like, this guy's, he's going to kill it. And like you said, the most important thing is it's not going to be one day. It's not going to be one week. It's going to take some time. You're going to look at hundreds of sims. You're going to think that this is the one 20 different times. And
Oh
then, but
yeah.
eventually, if you keep at it, it's going to work, and you're
Yeah.
gonna be able to get a deal done. So,
Yeah.
um, thanks again, man. I appreciate your time, and we'll definitely connect soon. And I'm actually gonna have you speak to the group soon. We'll coordinate a time where we'll get that. But other than that, man, have an awesome day, and we'll connect again soon.
Just thank you for your group, man. Like, I know you probably did it because you wanted to share info, but you're
Yeah,
empowering people, dude. I mean, I own a business because I joined that group. Maybe I would have gotten one. Would it have been as soon? Would I have felt as confident when you've got a room full of people? So it's neat that you've done that. I'm just grateful that you've done that because
thanks, man.
I don't know. I don't know how, if I would have made that. To me, I was doing it for a year and a half, and then all of a sudden I joined this group, and 2 months later I'm writing an LOI. There's something to
Yeah,
it. So appreciate what you do, and I
yeah.
mean, I hope this is why you do it, so you can,
Oh, dude,
give
this
people
this
lives
this
that
makes
you
me feel
create.
better than even getting a deal done on my own end. Like when I see other people start from nothing and then getting a deal done,
Mm,
5, 6, 2 months later, however long it takes, I'm like that to me it's one of the most rewarding things
I
that can
imagine
happen.
so.
So awesome.
Imagine so.
Thank you so much, man. I
Cool.
appreciate your time and I appreciate the kind
Yeah,
words as well.
absolutely, man.
All right.
Have a good one.